Hello, it's holiday season again, and it's time for FinGraphs Market Outlook for 2017. We've been proponents of reflation for the next 9 months, and will continue to do so in 2017. Let's look at the situation with our FinGraphs software. First of all, we'll start with the S&P 500 or the perspective over the next few quarters. We're still in an uptrend. We've pretty much reached an important level of target, but we believe that during 2017, our impulsive 2 targets could be ignited. These could lead us up to 2,500 during the course of the year, which is possibly 10% higher of where we actually are. We would justify this by the fact that our risk index is still pretty much in the middle of the range and still have some leeway to move up during 2017. Looking at the picture over the 3 time frames, we could see the weekly that we just mentioned and the daily and the hourly, which are still heading up. The hourly could lead us into an intermediate top into January, but in general, we believe that the move can continue possibly into mid-February. It is a bit into its targets on the daily, but the risk index still has a bit more to go. Looking at other markets, and in this case the Europe, so the Euro stocks, we could see that following the consolidation down from the first quarter 2015 to 2016, we have now broken above this range and are moving up again. The risk index is quite low and has a lot of leeway to move up, so we will be quite positive on Europe for the year to come. Looking at the picture over the T3 timeframes, we are getting a bit overbought on the daily here, but in general, we would still have some potential over the next 2 months here into possibly mid-February on the Euro Stoxx 50. Shorter term, a bit of an exaggeration here, but a slight consolidation into January and then moving back up into February. Looking at the Nikkei, quite a similar picture. We've had this correction down from the second quarter 2015 to early 2016, and we're now moving up again above the range, and possibly for another 2 months with more potential to come. The risk index also here on the hourly is a bit stretched, so we can see a bit of consolidation into the early stages of the new year, but possibly this is an intermediate top and we will continue to move up until possibly February. Now looking at the currencies, the euro has resumed its downtrend on this weekly chart or the perspective over the next few quarters. It could still have some time to go, but the potential is pretty much exhausted. It could lead us down to possibly just below parity. We could also see that the risk index is oversold. So our view is that we're building a base here, just it's a bit too early to call for a reversal. Looking at the perspective over 3 time frames, still 3 bears, so still too early to move or to buy into the euro. And also here, as with many other assets, we could see the trend continuing for another possibly 2 months into February and until it gets oversold and reaches its target into the very low 101. If we move on to a dollar yen, a picture which is very similar to the Nikkei. We've corrected down and are moving back up again quite aggressively. We could see that the daily charts still have quite a bit of potential. We're not yet overbought, so we could easily make it above 120, possibly up to 125 over the next 2 months. That said, it's interesting to note that yen may be weaker than euro, and so the potential here may be much stronger in 2017. So we could see the yen move up again and possibly make dollar yen move up again and possibly make new highs during 2017. If we now look at interest rates, they've been a key reflation factor. We look at them in reverse with the treasury notes. Here's a 5-year contract, and as with other assets, we could see that this downtrend that we've seen since July is possibly not quite finished yet. There's probably another 1 or 2 months to go until we reached an intermediate bottom. In general, the weekly hasn't quite reversed yet, but will soon will do. And it had reached its impulsive targets and as well as an overbought condition. So we think this is a long-term reversal in the making, and we will be quite bearish on bonds for the better part, or for the most of the part of 2017. That said, there is an intermediate bottom coming, but it's not there yet. And as we just mentioned, we believe a timing in February is quite adequate. Moving on, we look at the financials, which have also been very strong with rising interest rates versus the S&P 500. We could see that we have more potential during 2017 on the weekly chart. And on the daily chart, we could also see that it's probably another 1 or 2 months to go. So also here, we would probably target a top, an intermediate top towards February. On the commodity side and also a key reflation asset, we look at oil. Oil is in a correction up at the moment, and actually the first resistance are around the 70 level. So we could easily make it up to the 70s level in 2017. If we do make it above these, the next targets are around 100. But let's go at it one step at a time. If we look at it over the 3 time frames, we're still in a correction up, which still has quite a bit of potential on the weekly. The daily is still heading up, and the risk index is not yet overbought. So also here, we believe there's another couple of months to go, and possibly it could lead us into the high 50s. So this is VTI. Now, on a more cautious notes, we'll look at China. China, at least in dollar terms here, with the FXI tracker, has been correcting down for now 2 months. It is getting to its corrective targets, and we would be very cautious if it makes it below its corrective targets down, so below 33. And in general, if we look at the wider picture, this would confirm the resumed downtrend that we could see here on the weekly. So China, in this reflationary scenario, is a risk, and possibly into the second half or into mid next year at least. Looking at another asset which will be interesting if we do get a risk-off situation starting February is gold. Gold with reflation has gone in the opposite direction of interest rates. Also here we would see a low possibly towards the month of February and possibly below 1100. We're not yet oversold or just slowly getting there, so there's a bit more to go. We indeed, in the first stages of reflation last year, we did make a nice move, but this move has been widely reversed. We believe it's slowly getting oversold again over the long term, so in a risk-off period, and that's basically what we're seeing from the month of February, possibly until April, we could see a counter-trend move here, which could lead us back into 1250, perhaps 1300. Finally, to corroborate this, we also look at a defensive sector against the S&P 500, here the healthcare in the US. And we could see that the downtrend on the weekly is well underway and still has some way to go into 2017. That said, we could also see this intermediate target coming in. It's already oversold, so we would also see it here towards the month of January and February for a bounce in defensive assets versus reflationary assets. And that basically summarizes our scenario for next year. We wish you very nice holidays. Thank you very much.